We all have busy lives and want to get going. Big welcome to everybody. Thank you so much for attending. We're going to get right into the meat of this webinar. Darko is going to be providing you a lesson today. It's going to be actually, I think, quite insightful. I think they all will be. And we'll likely going to be doing these webinars each month. I'm not exactly sure at what time during the month, but we want to provide these on a continuous basis just so people can get an idea of what we do, how Darko analyzes his charts and everything, because his success has been like really, really good since, I don't know, he joined us in November of 2017. We've mentioned many times that the best and easiest way to learn to trade is by starting off with longer term, with like a swing trading approach. Even if you think that you want to be a short-term trader, that's totally fine. The reason for learning long-term first is because it's far, far easier to learn that way. Everything's slowed down. Once you learn to trade longer term, you can apply the exact same methodology and analysis to any time frame combination that you like. And I'll actually show you an example of that later on here. But the fact is, most people don't have time required to spend at their computer, trading short term. And, they have jobs or other obligations. And even if you think you do, sometimes you might be surprised if you might go, you know what, I think I would rather be a swing trader and trade that way, which is perfectly fine as well. Before we get going, I'm going to do something a little bit differently today. I'm just going to show you a few comments that we've been getting. Actually today was like so nice. We had some really nice things from comments from members, but this is just a few recent ones here. And just to let you know about give you a flavor for what the service is like and what people think about it. So Royston here says, for me, that's the guy I just said hello to. The benefits of long-term trading style are huge. Less stressful, it's not get-rich-quick service, and is supported by an approach to risk management at 0.5% of account value per trade. That's what we recommend. Vic and Darko provide competent mentoring with a demonstrable track record, no hindsight coaching, 2 pre-market analysis videos provided every week without fail. Darko's been done that since he became the lead coach in November of 2017, has not missed a PMA video. Pretty incredible. Regular webinars and podcast series, which is second to none, a comprehensive library of training webinars, all in chronological order to make it straightforward for a novice to learn the idiosyncrasies of trading. On that note, by the way, this is what we do right now is not really geared towards somebody who's never traded before. You should have some basic understanding, and I am actually working on a basics course as we speak, and I'm going to be getting it done as soon as I can so that somebody who hasn't traded can get a basic understanding up to speed enough that they can join our service. Okay, so I'll be working on that. This was just from today, and there was a whole bunch today actually. I just don't want to post them all, it just takes too long. But first time posting here, but feel like giving my 2 cents. I didn't put this fellow's name because I didn't ask for his permission. I don't use somebody's name if they don't say I can use their name. But it's in our chat room. This service, along with Darko's PMAs, has given me more clarity and hope than any other service I've ever been part of over my last 8 years of trying to figure this thing out. 8 years. I've noticed some PMAs are more clear than others because we all look at the charts in our own eyes. What I've done is re-watch the PMAs that aren't as clear to me, and after 2 to 3 times through, a light bulb goes off. The more I watch these things, the easier it is to see what Darko's pointing out. For someone who has tried everything there is out there, this is the place to be, and working your tail off to get through all the material and PMAs to me is just priceless. Well, that's so well said, because that's just basically what we're all about here. Jay here says, first I want to say I'm loving every second of learning what Coach's Corner is teaching. I'm very pleased with my decision to sign up for your service. We both know there are many, many services to choose from these days, and that makes choosing one quite difficult for a beginner. The honest truth about trading is that it is explained in the podcast is what made my decision to choose Coach's Corner crystal clear. Thank you, Jay. Just a couple more. Before joining CC, I was trading 1 hour charts or less, mostly 15 and 5-minute charts. And this is kind of a common thing, by the way. Just hear what he has to say. This is Lyndon from Australia. I became afraid to leave my computer in case something moved against me. I became completely burnt out emotionally and quite depressed. The emphasis on doing nothing except learn for the first few months in the CC, that's really important, was a real blessing. It allowed me to recover while seeing just how well your system worked. I started taking a few trades again now and feel so much more relaxed about the whole process. Trading has become enjoyable again. It's the way it's supposed to be. And I think this might be the last one. I've been a member of Coach's Corner for about 3 months. I previously tried both day trading and scalping, and I would have to say my mental health is much better when trading long term. When I did scalping, I felt like I constantly had to watch the charts and constantly watch my money. I get that this is not the case for an experienced trader, but that is why I feel like everyone should start with long-term trading. That's what I was saying at the beginning. I would also have to say that I personally find the higher time frames to be much easier to read and understand. Because of this, I feel that a less experienced trader will have less factors to take into account and gain experience faster from starting as a long-term trader. This is, a great comments. Not to take anything away from short-term trading. I mean, there's great short-term trades. You have to, you have to really get clear on what your style is. Okay. I'm going to hand it over to Darko right now. He's going to talk about correction moves versus continuation moves and what the difference is. And I'm going to get him over here right now. Darko, I'm going to make you a presenter. Where is that? Make presenter. Oh, Henry, how you doing there? It's great to see you. Jeeps, I just saw your name pop up there. Good to see you. Go ahead, Darko. I'll mute my mic.
Perfect. Is the sound okay, Vic?
It is perfect. You sound very good. Let's just say that. Okay.
Thanks. So let's get started. Hi, everyone. Big warm welcome to our webinar. Nice to see so many people in here. We are honored to have you with us today. And before I start the session, if you haven't listened to my podcast, make sure you do so. We actually recorded 12 brand new episodes since October last year. We have been recording, like I said, 12 brand new episodes. And I need to kindly ask you, if it's not too much to ask, to rate my podcast on Spotify. Right now, currently, I have 193 ratings. And I see that we have 64 people in the chat room right now. I know that many of you has rated the podcast already, but if you haven't done so, I would highly appreciate and be forever thankful. And actually, we are doing this series of free webinars, showing you a glimpse of what I'm doing within the paid membership, just because we are heading toward 400,000 downloads and listeners. So that's smashing. So obviously, when we pass 500,000, then I need to find another way to show you my appreciation and my thank you. So this is the reason why we are doing these free webinars, is because you guys and girls has been so loyal to me and us, and rating our podcast and listening to our podcast, and this is my way of saying thank you. So enough said about my podcast, and let's go to the session that I will be doing today. And before I give over the mic to Vic, I will also cover the future topics that I will be talking about in my future these series of free webinar. So in today's session, I will be talking about continuation and correction. Let's see if I have the right color. It's black, perfect. So everything in here that is black is continuation, and we also have red as correction, and most importantly is when correction becomes continuation, which is blue. Okay, and let me tell you this, and I'm obviously again dead honest with you, and that is what I will be talking about in this series. Okay, if you understand the concept, it might sound like super obvious, and you might say, oh geez, Darko, you took us to this webinar and you are telling like something that I already know. And I usually joke and say, no, you don't, because once you understand how price is moving, and you know when to distinguish a good trend from a ranging mode, and you know when to trade in continuation and correction, and when to wait for price, when a correction becomes continuation, is super crucial for your trading. Super important. So don't take this like easy and say, oh geez, this is too basic. It's not. This is actually what I'm drilling every single week, every single month, for my paying clients. Okay, and this is super important. So At some point price hits a level of support, and this is, you know, what I'm showing in here. This should be your higher time frame. Okay, and I don't care if you are a micro scalper, day trader, swing trader, position trader, or investor. There is time frame combinations that you should be using, and that's one of the future series of the webinar where I will be talking about time frame combinations. Okay, so this should be on your higher time frame, not on your entry time frame. Okay, so at some point on your higher time frame, price hits a level of support. So when price is in a continuation mode, okay, and then at some point price will be pulling back, retracement, pullback, correction, whatever you want to call it. Okay, so you need to identify if the chart you are looking at your higher time frame is it at a continuation mode or in a correction mode. And I will show you this screenshot first, and then we will be drilling it on live charts, okay, on real charts. So make sure that you totally understand the concept that I'm trying to talk about right now, because it all will make super sense once I show you the charts. Okay, so when price is correcting, price is usually, not always, correcting down into a level of support. Okay, so the best trading opportunities is when your higher time frame is correcting down into a level of support, and then you involve yourself in a trading opportunity. It doesn't need to be at the bottom, but as close to the bottom as humanly possible, so you can, trade the meat of the market. Like, how many times have you entered a trade up in here? By the time you enter, price goes in your favor slightly and then corrects, stops you out for a full loss. Okay, and you have no idea why. The reason for it is because you don't identify correction and continuation in a proper manner. Okay, and as long as you are not doing this properly, you will be forever struggling. Okay, so this continues, obviously. Then now we are in a continuation mode, price in a strong uptrend. Okay, and now you need to involve yourself as soon as possible before the meat of the market start moving. Okay, and then price goes on, we are, continuing, correcting, continuation, correction, and then at some point price will be hitting a level of resistance. Okay, sometimes price, you know react from a level of resistance. Sometimes price could react from in the middle of nowhere. Okay, and then, at some point you will have that losing trade. Why? Because the trend is your friend until the end. The only problem is you don't know when the end comes. So at some point you are trading, the correction, but now the correction becomes continuation. Why? Because we did a structure damage. Okay, that's super, super important. Violation of structure. Okay, now when you have a new correction becoming continuation, now you need to wait for that correction. Okay, now you need to rethink and reset, and from being a bull, just buying. Now you need to look for shorting opportunities and ignoring the buying opportunities unless you know what you are doing. Okay, so when you are a struggling trader and you don't have like a consistent results on your live account, you need to be focusing on trend trading. Okay, because if you do everything like trend trading, trading against the trend, trading the ranging market, that's too overwhelming. That's where the mistakes begins. Okay, so now when correction became or becomes continuation, now you are looking for this correction. Okay, and then we are getting a continuation, and then we have a correction, continuation. And this could be like, just for example, this could be like, let's just say that you're a day trader. This could be your daily chart. Okay, on a weekly, the trend is intact. We never did any structure damage on your weekly chart or on your monthly chart. So therefore, it's so important to have an idea of the bigger picture regardless of your trading style, because you might think that the trend is down, and which is down on a daily chart if this is your daily time frame. Then on a weekly chart, price just looks like this. Okay, so this move in here is just a normal correction on your higher time frame down to support. Okay, so if you have no idea what your higher time frame is doing, you might think that this will be heading down forever, because the price moves in fractal. Whatever happens on a monthly chart happens on a weekly, on a daily, on a 4-hour, on an hourly, on a 15-minute chart. Price is fractal. So therefore, by understanding the higher time frame, and when price hits a level of support, we are correcting on a monthly and weekly. This correction in here looks like this on a daily chart. Okay, it goes for 4-hour charts. It's just the same thing. If this is your 4-hour time frame, then your daily chart looks like this. Okay, so therefore you can never ever trade one single time frame in isolation. You need to have like at least a screen where you have like 4 charts. Okay, the upper part of the chart is your higher time frame. The lower part is your entry time frame. Okay, sometimes it could be, let's just skip the time frame combinations for now and just focus on correction and continuation, because I will be spending an entire session teaching you which time frame combination you need to use for a specific trading style. Okay, so now this is correcting, sorry, this is in a continuation mode, and then you now think that this is where price is like in here at support on your higher time frame, and then price correcting itself, and now correction becomes continuation again. Why? Because we did some structure damage, violation of structure. There is an institutional thinking behind it, where in this phase the bears won the battle among the bulls, but here the bulls are taking over the trend again. Now the bulls are in control, and when the bulls are in control, you need to be looking for buying opportunity when price is correcting itself down to a level of support. Okay, so and then the trend continues. Super important. So I hope that you understand the concept of price action reading when it comes to correction and continuation. Okay, so let's go and do this now on a any given pair. Okay, I'm not cherry picking any pair, and I want you to do this on your own, and feel free to give us some feedback. Okay, so don't take my words for it. Just go back, whatever you are trading, stocks, commodities, indices, cryptocurrencies, forex, whatever there is a charts on, do this on your own, and you will like magic happens. So let's just start with whatever time frame. Let's just say I'm starting with the daily time frame. Okay, so there are times where the trend is clean, and that's where you should be trading, when the trend is clean. Okay, so price is, now we are in a continuation mode. Okay, we did some structure damage. So what's this? This is correction. Where did we correct to? Look left. It's not, you could pick any pairs you want. I could show you everything you need to know about correction and continuation. So now when we have a structure damage, the bulls are in control. Do you want to buy in here? No. So when price is correcting, you don't think that that the trend is now it's heading down, and no, you need to interpret price properly. So now this can only be correction unless we breach this low, and then correction becomes continuation. price hits a level of support. Obviously, I'm not showing you right now how to enter a trade and benefit from the meat of the market. That's obviously within the paid membership, but I will at some point also show you as samples, uh, a small portion of like how to put everything together at the end of this series. Okay, so now when we are correcting, what do you expect price to be doing? We expect price to be continuing, right? Okay, so now we are in a continuation mode. Geez, it's so hard to draw this line straight. And now we are correcting. Okay, this is correction. Where did we correct to? Do you think it's a coincidence that we stopped in here? No, look left. Okay, and you might say like, so this looks like easy, right? And this is the thing, like just before I logged into this webinar, one of my paying clients just sent me a voice message and a screenshot of a potential trade, and he had some questions, and I just saw something within seconds, and I sent that message to him, and he said, "Oh, geez, Darko, you see, just things look so easy when you do it, but when I do it, just like it's not that easy." So you need to train your eyes and brain to look at what's important. Okay, obviously there were like lots of opportunities just by watching the daily chart, entering this like pain-free trades, and then now we are in a continuation mode, and we barely made a higher high, higher close. Okay, so now we get a feeling for like price might be hitting a level of resistance on a higher time frame. Okay, this is a daily resistance. There might be a higher time frame resistance, but the trend is still intact. We are still making higher highs, and actually this is a higher high, higher close. I just did that, watching, drawing my crosshair to see if we did a higher high, higher close. So now you are expecting trend to be continuing to the upside, and price very well came down into this level of support again and went up. This is not a swing, okay, but if you took any trades in here, you took out the risk, that's a different topic. So the trade management, we take that another day. So now at some point, the correction became what? Became continuation. Why? Because we did structure damage, violation of structure. Until in here, the bulls were in control. Now the bears is in control. Okay. And what's this? This is a correction. Where did we correct to? We corrected into a level of resistance. Okay. Like I said, this is magic. Like, even I'm seeing this for 17 years. When I talk about some of the stuff around trading, I still, get goosebumps. So I was looking for a trading opportunity up in here, and I pointed that out in my PMA, this daily ACAT, okay? Because I saw this correction, price correct itself into a level of resistance, and I get a confirmation entry, or at least my signal. Unfortunately, the next coming candle did not correct itself deep enough to get me filled on my entry time frame, which was the day, the hourly chart. Okay, so there were some struggling traders that said, "Hey, Darko, why are you shorting this? Because price seems to be heading up." I said, "No, price is correcting. We are now, did some structured damage. The correction became continuation. Now this is just correction." Okay, and then when this happens, oh geez, like how did you see that in advance way before it happened? So now we are correcting, and now this is continuation. So what price could do from here is like we're either like correcting up into a level of resistance for further downside. The trend will be down on the daily chart until, like, if price is heading up from here, let's just say that we hit something super strong. Okay, and then when correction becomes continuation by giving you a bullish swing break or a rotation, And obviously, if you don't know what a swim break rotation is, that is explained within the paid membership in great detail. I don't have time to cover this right here, right now. That might be like a different session. So until this happens, the trend is down. Okay. So let's just quickly go to uh, AJ. Okay. And this time, this was the daily chart. Let's just do this on a monthly chart because it doesn't matter which time frame you pick. It's the same thing. Okay. We are correcting continuation. Obviously, we hit something in here. Price is correcting, 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 and now we have a higher high, higher close. Now correction became continuation. Now what's this? Correction. Okay, continuation, correction, an ugly one because this is like more rangy, but it's nonetheless a correction. Okay, continuation, correction. And now price seems to be having a very hard time to breach this swing. This looks more like a double top as I'm speaking. Okay, and yes, I see that we are building buying pressure. So once we breach this high, then the trend is intact. Then we just look for another correction and then continuation until we get structure damage. Okay, I see that the clock is ticking. I don't want to make this too long. Let's just show you a ranging, like Aussie Kiwi right now is ranging. Okay, and that's where you should not be trading, because there is, like, if you look at this, like, can you distinguish a clean correction continuation? No. And that's where the problem begins, when a struggling trader, or, like, whatever, for the lack of better wording, are desperate, to pull the trigger. When price is looking like this, you should stay away from the market unless you know what you're doing. Okay, you should only be trading when you have a clean trend, the way I just showed you in the examples before. This is an example of when the market is ranging. And you might say, but Darko, you don't see the market is ranging until the market is ranging. That's actually wrong, because I have a very specific objective system when we see ranging market before everyone else. Okay, before everyone else. And for those who have been with me for a while, they know that that's how we do it. So we identify a ranging market before everyone else in the market, and then we just stay aside until something breaks. We breaks to the downside or upside. Okay, let me show you another ranging market. USD CAD is also another ranging market. Do you see, like, let me just grab my pen for you again. So this was continuation, correction, and then this were supposed to be a continuation, but made a lower high and a higher low. That's how we identify, like, one of the rules for ranging markets. And then we made this one in here, but we still did not breach this high. I don't care about this high. This is the original top when we corrected. This is just complex pullback. And obviously, if you don't know what complex pullback is, that's the advanced market flow. That's super important to understanding price, because a struggling trader might think that, hey, we have this high is higher than this high, then the trend is up. And then they start longing, and then all of a sudden this happens. Complex pullback is super important to understand, and that's explained in great detail. Okay, so when the markets looks like this, nothing is happening. There is a way of trading markets like this, but I won't be covering it in here. This session is only about correction and continuation. Okay, that's super important. So let me erase the drawing and show you a trade we took on Euro Swissy. Where do we have Euro Swissy? This is Euro Swissy. Okay, and as you all know by now, everything I do in my service is pre-recorded, and I'm showing trades way before they happen. Okay, I draw boxes like this. I show you where to have your stop loss, where is your entry, where's your target. And okay, so why did I take this trade with the higher high stop loss? uh, because I identified. Do you see how this low did some structure damage, and then we this is correcting, continuation, and then correction back into a level of resistance. Okay, and this level of resistance is when you combine the higher time frame. Do you see the arrow? I pointed out the arrow for the clients. This is a weekly resistance. So price is pulling back into resistance. I have a natural stop that I'm okay with. This was the entry. This is the stop loss. Okay, and you might not believe me, but there is a PMA. Once we get filled, when price was up in here, I told everyone in the chat room, and this is no joke, I I marked this level by reading price action, advanced price action reading, naked charts. I said, I kid you not, I draw this line. I said, if you are taking any profits, when price hits this level, take something off, and price hits that level to the pip. I cannot make this up because it's pre-recorded, and price was up in here. You can go to the date of the PMA and see that there is no cheating, or nothing is involved. So, and there is a reason why this level is, like, why I pointed this level out. You might not see it, these great details. That's another session. Okay. So that was a trade. And now I will show you a potential pending order, okay, on Kiwi dollar. Okay. Okay. So let's start with the higher time frame. Okay. The higher time frame is price is correcting. Where are we correcting to? Look left. Okay. It's not a coincidence. Price is these levels, if you know how to identify them properly, okay, these levels act like magnet. Okay, so when price is correcting into resistance, this is correction, continuation, and then correction becomes what? Continuation. Now this is like correcting, correcting, correcting. Oh, structure damage. Bulls are in control. Now this is continuation, and now price is correcting down to where? Look left. Okay, so if you know how to do this properly, a new world will opens for you. And if you see a trading coach showing you this in advance, explaining everything candle by candle, you will develop a very, profitable skill or skills to do this on your own live when the market is moving, and, learn how to read price, pure and advanced price action reading. And now you are looking for a buying opportunity based on the rules that I'm giving you. I'm trading my own developed 3 patterns. Okay, swing break rotations, set and forgets, and ACATs. And there are also rules when you have identified trade where you don't need to wait for a pattern if you have a natural stop on your entry time frame, if you that you are okay with. So this is how you identify, high quality, low risk, and where the risk reward makes sense. And this is where you make that, 2-to-1, 4-to-1, 5-to-1, and if you have the monthly and weekly in alignment, and price is coming down into a level of support, that's where you make that 5-to-1, 10-to-1. So the risk reward is super big when you are doing it correctly. Some people like draw a line in here and try to, price needs to correct, price needs to retrace, a deeper retracement down into support. Like if this has continued down, well, that doesn't mean that I was wrong and the market was right. We are trading probabilities. Okay, that's super important to understand that trading is a probability game. And if you have a system that works more than losing, well, then you have yourself an edge. And once you see that edge, you are trading that edge every time you see it. Okay, because you never know on any given trade if that's going to be a winning trade or a losing trade or a break-even trade. And I couldn't care less. Why? Because I know that we have a very, very high win ratio. Okay, like in month of January, we had we traded, and obviously everything is in the PMAs. So we traded two trades that were highly correlated. We risked 0.25 on both of them, and both of them lost. Then we just lost 0.5%. That's what we are risking on one trade, and that's when we risk expose. Okay, and I explain everything about risk exposing, trade management, and everything within the paid membership. So we had one losing trade in the month of January. Okay, so yeah, so this is basically a quick, brief session about correction and continuation. And I just before I hand over the mic to Vic, the coming series of webinars, one of them will be about only about structure damage, which is like basically swing break rotations. But I will show you recurring price action movement, and once you see that properly and you know how to identify that price action movement objectively, a new world will open for you. And once you see those around key levels of support and resistance, that's where the magic happens. And the next one of the next series will be about the 5 candlestick formations. We have like hundreds of candlestick formations. I picked the most profitable 5 candlestick uh, formations. That is, the meat of the most of the winning trades is when you see those properly around key levels of support and resistance. Then I will show you how to identify buying pressure versus selling pressure in one of these free webinars. Obviously, I just did correction and continuation, and then we have time frame combinations. That alone will make a huge change for your trading, because if you don't know your trading style, which time frame combination it requires to take out the most profit from the market, then you will be forever struggling. So time frame combination is super important. And obviously, depending if we have like lots of sign-ups and people are like loyal and joining these free webinars, then we will just I can show you a session about how to distinguish a great a super strong significant neckline from a bad one. Okay, so yeah, so this is basically these are the free webinars that I'm doing as my thank you for your loyalty to our service and to our social media resources. If you have any questions, feel free to ask them now or later, and I will be handing over the mic to Vic. And hopefully this session was useful. So I will be reading some comments now. So if you have any, like, was this a waste of your time? Was it like helpful, useful? Feel free to type those comments, and I will read your comments while I'm handing over the mic to Vic. Thank you so much for listening, and I will talk to you soon. Cheers.
Okay, yeah, thanks, Darko. What an I don't know. I just thought that was a really, really good presentation. Like, it was just so to the point and all that. All these lessons are, of course, are covered in our at our member site, and Darko covers this in his PMAs in like 27 different currency pairs. So what a super education. While those comments are up, I'm just going to finish off this presentation, because a lot of people that join our service go like, I can't afford to trade longer term because of my account size and all that. No, I'm going to show you how you can do it. And if you have a small account size, it actually is not a problem. I'm going to show you very quickly a trade that one of the trades that Darko, he talked about the losing trade in January. He also had some really good winning trades too. So and some of them start and stop. They get going, we get the risk out, and then they don't continue. That's just part of trade management, but they end up being a winning trade anyway. Here's a Euro CAD trade that Darko pointed out in his PMA on January the 22nd. You can go back and listen to it. This was the 4-hour chart, which is based on the weekly chart, support, resistance levels, and price action. And Darko had talked about buying this when price was up in here. He said, okay, this is where we're going to be looking to buy this level right here, and he's going to have a low stop loss. Okay, this meant having about a 90 pip risk in the trade. Okay, so that might be too much for some traders. Okay, now I want you to see this candle where it hit right here. You see this? And go to the next page here. That's the same candle. That's called an ACAT. That's one of our patterns, okay? One of the ones that Darko has come up with. And there's a specific way to buy these on the next candle. And in this case, it was on a, let me go back 1 second here. When you're on a 4-hour chart, your entry time frame now becomes a 15-minute chart. And Darko will talk about this in a future session in more detail. But on this 15-minute chart, this was that ACAT candle. There's what it looked like on a 15-minute chart. It pulled back to the pip, okay, where Darko recommends to buy it. Now we need a low stop. This one needed about a 15 pip risk instead of 90. So listen, here's the thing. This was a fantastic, I mean, this made like, I don't know, it was up about 70 or 80 pips on a 15 pip risk. And I say that, by the way, because when it went up, if you look left, when you start hitting these levels of resistance, because you see how price went down and up and down and up and down like this. These places where price rallied are potential places to take profit. And that's, look where it did, look what it did. It came down. So that was a very, very profitable trade. But what I was going to say is that these trades don't always happen. Like, in other words, it could have hit this level that Darko pointed out and just gone straight up without you, and that will happen. You don't always get filled on a small time frame, but if you have a small account size, you have to try to do it this way in order to participate in these. Don't worry about it. You're going to get enough of them that'll be very well worth it, worth your while. Okay. So I'm just going to finish up with a few things here. Let me see what I had here. I wanted to just get my notes out here. And then we're going to be done. I just don't want to take up too much of your time. First of all, if you want more information about our trading, or you want to talk to me, or you have questions or whatever it is, send me an email. I'd be happy to get back to you. I'm usually pretty good at that. And if you're thinking of joining our services, contact me. We can go over pricing. I'm not going to lay out a bunch of pricing here for you. I know you guys see enough of this, but just contact me. I'd be happy to go over it with you. And because the thing is, I like talking to people and finding out about them, because it's important that we are a good fit for you and that you're a good fit for us. So I can find out where you're at with your trading. And, you know, when you send me an email, I just a request, if you can make them as short as you possibly could, but, you know, I mean, you know, make sure you get your information across, but I don't need to know your kind of your life story, if you know what I mean. Because it just is a lot of emails to go through for me, and if you could do that, that'd be great. And if it means having a short conversation, we can do that as well on Skype. I know that starting something new like trading and a new service and all that can be daunting, a little bit unsettling and a bit fearful, and it's human nature to have this initial knee-jerk reaction to anything outside of our comfort zone. And the reason people are fearful is because of the inclination to play it safe and to remain in a comfort zone. But if I mean, obviously we can assume that you're here because you want to learn to trade in a consistently profitable way. There's just no getting around the fact that you have to do something, right? Pretty obvious, and that means overcoming the fear factor. Everything that you want to do or you want to be or have or whatever it is only found by getting on the other side of fear. So yeah, I just encourage you to not be imprisoned by the comfort zone. I think we all know that nothing ever great happen for anybody who remain stuck in place. And listen, you may end up, trading may not be your thing. I don't know, because this applies to whatever it is, okay? And maybe it's something else in your life that you want really badly. I heard a great quote. I wanted to put this up because I think it's really good. I don't remember who even said it. Maybe somebody else might, but it was that they said that at some point you have to decide that what you want is far more important and worthy than the fear which prevents you from achieving it. In other words, like, don't let fear dominate your life and keep you from doing or trying, the things that you dream about. And if learning to trade the Forex markets profitably is one of those things that you dream about, then, hey, you know, get bold, take bold action, go for it, and we'd be honored to have you with us. Okay, so that is my little speech. Here's the different social media sites that we have right here. You can just Google search any of them, or you can find us at any of these places. Here are some informational links right here. You're all going to get the recording, so you can pause the recording to get these. So don't worry about writing them down right now if you can't. Um, and this is my contact information. Hey, listen, if you have if you join the service or whatever and you can't log in, or you're in the service and you can't get a video to work or whatever it is, don't contact me or Darko, because we don't have access to any of that, the membership subscriptions or anything. Vic Young looks after all this, and he's at info@forexmentor.com. Because if I get an email like this, I have to forward it on to him. So it's just one extra step, and he's really good about getting back to people. Our CC Starter is a free service. This is particularly good if you've never, if you haven't traded much before and you just don't have any idea what we do, kind of thing. You can join that here. It's free, and then you'll get some content and an idea of our approach. And then this is our direct link to our Coach's Corner service right here. So yeah, that's it. Thank you also very much for attending today. And when we have a date picked out for our next little webinar, we'll let you know. Let me have a look at these questions that are here. Am I missing anything here? Darko, have you seen anything that, let me see. Peter says, you complement each other incredibly well. Darko for the boom boom machine with his amazing deep digging skills and manic back to us. Vic with his elegant simplicity sometimes distills Darko's profound knowledge down to a level that makes it understandable, even for a human like me. Above all, you are both the most sincere and honest teachers a student can have, and that's why I'm with you. Well, Peter, thank you so much. I think we all know there's enough stuff on the internet that's not very nice and not very good, or not, kind of shady. But we sure want to be that way. That's for sure. But so thank you for that comment. Let me see here. Excellent, Darko. Very easy to follow. I appreciate it. Thank you. Thanks, Roberta. When you say risking 0.5%, is that of your whole account or per trade size? Example, you have $1,000 account. You make a 250 trade. Do you still risk $50 or 0.05% of your 1K? Or do you distill that down per trade? Yeah, it's 0.05% of your account. If your account size is $1,000, that's $5, which you might roll your eyes at and laugh, but I'm telling you something. And you can go down to micro lots. Go to micro lots and trade it. Get good at that. You can always ramp up your account size. And hey, you might want to risk 1% instead of 0.5. Like, we're not the risk police, right? You can do whatever you want, but we're telling you this because capital preservation is at the heart of trading. And if you don't preserve your capital, you will wipe it out, and nobody wants that. So so sometimes if you have on 2 positions, you might have to split that risk up. Or if you're up profitably on one of the positions, you can take the risk out of it and still go ahead and trade 0.5% of a new position, if you understand what I mean. Thank you so much, Marcus. You explained that very well. I thought Darko did a great job on that. I really liked it. Great session. You're welcome, Khalil. Thank you so much. Thanks for being with us, by the way. Clement said, thanks, Darko, that this was helpful and eye-opening. Ranjit says, I'm a member and have never yet logged in or viewed your pre-market session. Shame on me, sincere. Yeah, hey, Ranjit, get in there and do it, because there's just a gold mine of stuff in there. It's good, really good stuff. Yes, you can rewatch this video, Cal. We're gonna send you the recording. And it's not on Spotify, so we'll do it on YouTube. Okay. I love these webinars. Thanks so much. Tanya, thank you so much. We'll look to do more of them in the future. Thank you both. It doesn't get any better than Forex Mentor. Oh, thank you, Greg. Thank you so much. Yeah. Jamie says, hey, Darko Vic, thank you for this free webinar. This has been super helpful. My question is, when you are analyzing which support resistance to use, how do you determine this? It appears we should ignore the necklines on trend up or down, and we only pay attention to where there is a gap before continuation and correction, or elbows, as I've heard them referred to, if that makes sense. So identifying the proper neckline is really important to use or Darko, did you want to talk about this, or I can talk about it?
Yeah, sure. So the thing is that this session was about correction and continuation, and this is just a small part of your trading. You need to master so many other things, like, identifying trend properly. I can guarantee you that most traders around the world are identifying trend in a wrong way. Then you need to identify a great level of support and resistance, and there are lots of ways of finding these great levels that I teach. How to distinguish a good level from a bad level, and then you need to have trade management, risk management. That there is so much more into trading than just correction and continuation. But by following these free webinars, I will show you samples or brief speaking about the most important topics of every aspect of trading. And obviously, this is just like 5% of what I'm doing on weekly basis for my paying clients, because I'm drilling this the entire concept. Like every PMA is 30 minutes, okay, where I talk about trade management, risk management, a trend, support and resistance, correction, continuation, and I also talk about the mental part of trading. Uh, Everything around, like every session is like everything is there. So by explaining, just answering like a question, I need to show you things in great details, the way I just showed you about correction and continuation, in order for you to have a deeper understanding of this complex market, this thing called trading. So
Yeah,
yeah.
yeah, and the significant neckline issue, Jamie, will be we're actually Darko's doing another one of these on significant necklines, so it'll become more apparent, because you're right. There's necklines all over the place. How do you know which one to pick? That's a great question. Yeah. Okay, I believe that is a wrap. And Ranjit said it so well here. Darko started in November 2017, right? And Ranjit says Darko has never veered away from his system, always constant and consistent. We should be paying attention and following in his footsteps. I can tell you this, if you want to just go and have a look at all the PMAs that have been out there, you'll see that every single year has not only been profitable, but each year has been successively more profitable than the previous. That might not always be that way, but that's the way it's been. And we just keep doing the same thing over and over. Yeah. Darko, thanks so much. Appreciate it. Yeah.
Thanks, Vic, and everyone else. Thank you so much for attending. I hope to see you in my next free webinar. Thanks. Cheers.
Awesome. Good. Or if you're ready to join now, then go for it. Contact me if you need any pricing information. And thank you all so much. We really appreciate it. Hope you got lots out of it. Yeah, and then from that, we'll just leave it at that. And if you want to have any questions that you figure out later on, no problem at all. You just get a hold of me, and I'll get back to you ASAP. All right, thanks. Cheers.